Hey, good morning, guys. So this one's a subscribers only stream, right? So back to kind of lessons, kind of education and everything else, right? Now, back last week or the week before, I posted a couple of things on both Bitcoin and Euro and had quite a few DMs about, how I saw what I saw, why I was seeing what I see, and just kind of general intrigue, I guess. Now, one of the things that was really, I suppose, really interesting was Paul and myself and Paul hadn't spoken about this. Paul actually posted a really useful video on volume. What I'll do is I'll try to find that and kind of put that back in the musing channel with this video at the same time, right? So, um, the general idea, right, is what a lot of people don't seem to understand or even comprehend is how volume in x-axis and y-axis works, how these things fit together, how you can kind of get to see it over the chart and kind of on the chart. Now, for me personally, I used to trade a lot of volume type tools and so on, right? This is kind of not where I started, but kind of got in kind of early. After a while, what you kind of get to see is you kind of see it without the tool, and therefore you can go back to kind of the basics, back to a regular chart. You're not paying thousands of dollars per month for charting software as you would have done back then. The the, I guess access to footprint charts are a lot easier than they was kind of 15-20 years ago. Now, in the grand scheme of things, right, once you kind of know it, you almost don't need it, right? And I always kind of think of this a little bit like when you take, your driving lessons and you go for your test. Everything is kind of 10 to, as soon as you pass your test and you're kind of driving on your own, your hands kind of move all over the place. You're not really kind of doing what you should be doing the same, but you kind of get better over time with that. So I think you treat this the same, right? Now, obviously putting some of the pieces together. Yesterday, I did a Trading View stream, right? Trading View idea or video idea, whatever they call them these days. And I talked about the different time price opportunities, obviously session volume, fixed range volume, visible range volume, right? As well as the axis across the bottom, right? So, look, when you when you look at what the chart is trying to tell you, right, the obvious thing a lot of the time is clearly missed, right? When you look at things like this, there's a gap, right? There's a gap up there. There's a gap down there, right? You can see a gap, right? You can see gaps. You can see gaps. You can see gaps, right? You can spot these pretty quick, pretty easy, right? But sometimes you get little gaps that are not so obvious, like this one there, right? So they're not as obvious, and this is where, unless you're looking at every little bit of detail, and again, I kind of advise you almost not to, right? I think a lot of people, they want too much information, and too much information either takes you, away from a trade because it's like, oh, well, it's not perfect, or it puts you in the wrong type of trade because you've tried to assess too much. So you got to find kind of the happy medium, the happy balance, right? So anyway, when we put all this stuff together, one of the things that you really have to keep in mind, right, is regardless of what we do, if we were to put a visual range, right, what I'll do is I'll put this on technical profiles and I'll put a visual, where's it to visible range, right? The issue that you have is, where do you put data? Watch this change as I move the chart, right? The issue that you have is that this is calculating, this as well as this, right? The problem for me with this is technically, as this comes up, right, a lot of this range has already been mitigated in this move. Right? So it's kind of double data, and therefore you kind of don't need that the same, right? It's not really as valuable, right? It can still be useful to a degree, but it's not really valuable, right? Then what you have is you have ultimately session volume, right? Now, again, a similar thing, right? Depending on the time factors and the time frame that you're kind of looking out for and you're looking, towards. If I put this on, say, a 15-minute time frame, right? What you're actually seeing now is every single one of these are simply, you know, sessions, right? It's kind of per day in that sense. When you look at what I've done with this one, right? What I've done is I've colored the, actually, I'll show you the settings, right? So I've actually colored the up volume and the down volume just in blue and yellow, right? That's the kind of default settings. Now, when you find the value areas up and down, they tend to come in the same, predetermined settings, right? So you've actually got the blue and yellow as I think the blue up and the yellow down. The only problem is when you put them back to the color, right? They become very difficult in terms of knowing, what's what. You've got a slight shade, right? But you just change the color. And the reason I've done this is if I put green up and kind of red or orange down, right? I got a pretty good idea in terms of the value area as well as the volume up or down, right? Now, obviously, you can make this to suit your own style, your own, charting color scheme or whatever you want to do, right? But for me, this just makes a bit of sense. So the longs and shorts of it, right, is I've got anything that's blue or green is kind of positive. Anything that's yellow or red is kind of negative, right? Now, first things first, if we were to zoom out on, say, a 1 hour time frame, right, what you're going to find is like a consolidation like this one, right, is going to give a lot of like volume, right, a lot of interest because it's technically condensed, right? If you have Bollinger Bands, for example, you might have a wide range like this, and then it kind of starts to narrow, and basically all it's doing is compressing, right? So what you're doing is you're seeing, the compression, the squeeze, if you will. Okay. Now, at this particular point, right, there's two, maybe three different real useful kind of techniques and tools, for this, right? You can easily spot that little box without any of these things, right? What you do have is you have this kind of point of control that almost marries up, marries up, marries up, right? Now, at this particular point, this is the area of interest for me. We then dip below it, right? Now, think of the master pattern technique, right? We dip below, we expand, right? We then come back. This is the retest, and then we rally up, right? So, at this particular point, again, you can start to see how these things fit together, but I didn't need this session volume to tell me, hey, this was actually that contraction, this was actually that, consolidation range, consolidation move. On smaller time frames, you're going to see, ones like this. Again, similar kind of move, right? You could draw a line out there. Now, when you put that together, right, you're going to quickly understand where the price is kind of being attracted to because you have liquidity on one side and the other. Now, if we look out at where we've come from, right, we've come from down low, right? So this is another way, and I'll put the session volume back on in a second, right? But what you can also do is use the fixed range profile. I go swing low, swing high. Then I'm going swing high, swing low, right? And what I've now got is a couple of key bits of information that are kind of relevant to where we've come from, right? I can then go again from high to low. I can now go from the low to the high, right? And what you'll start to see is that, we've kind of slowly increased. We've gone relatively sideways, sideways, and then we've kind of broken up and above, right? Now, when you look at a move back down, what this is going to start telling me straight away, right, is all the areas of interest on the way down. So when I put things like the Bitcoin call and I've talked about the hiccup and the pause and the next step and so on, right? This is kind of how, without using the volume personally, right, and this is just experience, is I'm looking at these areas of interest, right? So, just to give you an idea, there's a massive drop off in volume there, right? So just different, I'll put this as pink, right? Massive drop off in volume there, right? But that marries this spike in volume there, right? So this is definitely going to be an interesting area for two things, right? Now, if we were to obviously fall down and through this, you might come back for the retest, and technically it's this that's given us the resistance now on that way down, right? But the fact that we kind of lacked the volume there showed that there was buying intent, right? So again, this is where it becomes an area of interest, right? But you don't have to go any deeper than that. You don't need to go, well, I think this and I think that. All you need to know is that it's there, it exists, right? And that's the main. Now, another thing you can do is obviously go and cover all three of the ones that I've just put on there, right? And again, you're going to see point of control, massive volume, right? So you can start to, decipher where the levels of interest are, where, the lack of volume is, where ultimately the big support, the big resistance is going to be kind of into the future, right? Now, if I couple this with the session volume, right? One of the things I said to you, there's two or three techniques, useful kind of aspects of these things, is you also have this value range, right? And it's part of the reason that I highlight this is the value, right? This is the value. This is the value, right? They're very obvious and very clear to see pretty quick, right? So if you then think of what we've done, we've gone up in value, we've gone down in value, and we've gone up in value, right? Look how easy that is to see, right? Without any need, I didn't need that to say, hey, look, this is what we've done, right? So again, part of how you get to see it without seeing it is that it's pretty obvious in terms of the chart that you've already got, the chart that you're already seeing, right? Now, when you put all of these pieces together, all you've done is you've created, a little bit more information. You've given yourself more information. You've created a bigger picture, right, of, why, where, what, how. Now, if you step in to use things like the CVD, the stochastic, these are all lagging indicators, right? So again, there's nothing kind of, magical about them. You can't look at these and go, it's the be all and end all. But what you can do, I'll show you this next little step, right? If we were to come in and put just regular volume on the chart, right? This is just the basic simple volume across the bottom. I'll get rid of this one, right? We're going to see what kind of happen, what's driving these moves, right, at certain key areas. So this one here, right, a lot of volume on that candle, and that kind of goes through the point of control, right? So for me, the quickest way to identify that is, look, I'm going to put a line on there and say, that's an area of interest for me. I'm going to change this different color just for the video, right? Then I'm going to do the same thing. I'm going to look at these spikes and say, okay, what happened there? Was a massive spike there. Again, we were above the POC, right? But we spiked to no volume, right? Then ultimately we come back down, which means this level there at the low, right? The closest thing we have is clearly this spike here, and we've got a lack of volume, right? So at this particular point, I might do something like this, put a box sort of range from massive volume to no volume and drag that across, right? Now, a couple of ways that you can read this. We go below it, we come back above it, right? Which means we're above the value area, chasing now a new move up, right? In theory. Bear in mind I'm on a 15-minute time frame, right? Now, at this particular point, we've got definitely a target to the downside, as well as the point of control on one swing, point of control on a second swing. And I can average these out. So let's go in the middle of the two. Right? I'm going to get rid of these just to make it cleaner, right? And all of a sudden, I got a couple of key areas that are areas of interest, right? That's been mitigated. This one's already been mitigated, right? This one there is still an area of interest. Technically, we've already had it mitigated, right? But it's the closest range in, bigger picture, right? So what I now have is, again, pretty big volume there, right? That volume there obviously was back down and through this key area. So again, technically, let's just say now that's mitigated, right? Now we're in a position where I'm looking for, what's next. We got all this kind of to the downside, right? And although we've technically mitigated that and come through it, it's the biggest block, it's the biggest level of interest, right? So when I then zoom out, I'll have to get rid of this. I don't need this anymore for now. I'm going to come out to, let's just say, the weekly. This is a massive jump from the 15-minute time frame. I'm going to look at the weekly and I'm going to say to myself, what am I seeing right now? Well, I'm seeing technically a much larger move down, right? The way we see in this obviously is up, down, up, down. We're creating, a lower high, right? Now, at this particular point, if I was to zoom in even closer and coming down to this little bit, right, I know that I can now drop into a daily time frame just to assess this area. Right? Again, similar kind of view. And this is how you fit all these things together, right? All I need to see is that technically we're doing a similar dance, right? Which means this area here is an area of interest, right? Because we've technically got liquidity up and above it. Now, at this point in time, the question then is, are we likely to go and chase this liquidity before it drop back down? Because technically, all of the bigger pictures, the daily, the weekly, right, they're all pointing down, right? We've now ground up, and this comes back to what I said, last year, 18 months ago with Bitcoin. The reason that nothing's changed, the reason I keep saying nothing's changed, is that when you analyze these charts in, in a weekly, monthly time frame, you can almost see what they're about to do based on how they act when they get to where they're going. Right? So if you assume that we kind of enter in the station, right, this is the best analogy that I've been able to come up with. If we enter in the station and we kind of running out of steam, right, there's my station, there's my area of interest. Right? The area of interest we're kind of coming into, we probably see that the stochastic, let's put the stochastic back on, the stochastic is nearing overbought, right? We've got to be, up that high somewhere, right? We're overbought, right? So at this particular point, you can kind of tell that we're not going to be exploding through and then dropping back and coming, because this explosion through should have almost created the base here when the stochastic was down like this. That would have given us value through and down, right? So again, how these pieces are kind of piecing together, right? Now, if I come back in, I'm going to say, look, this is where, volume, this is where the data, this is where, the info kind of means less, because you can see it, right? Now, if we look at things like, we've just basically got this gap, we've got another gap, right? So we mitigate the first gap there, we come up, right? We mitigate the second gap, we kind of reject, right? Now at this particular point, what we've got is the last buy before you sell, in this, well, actually this range here, right? So for me, the area of interest is pretty clear, pretty obvious, and that's without anything on the chart. There's no indicator whatsoever. Right? Now, if we were to do, as I said earlier, right, let's go from the swing high, swing low, right? There's your area of interest, right? Again, see how you saw that without any need of putting the volume on, right? Next thing, we're going to go, again, high to low, right? There's our area of interest. Well, clearly we've marked that up, right? Now, putting all of these things together, right? What you're actually seeing is the difference between low volume or no volume, right? If you zoom in, you're going to get a consolidation. If you zoom in, you're going to get a consolidation. If you zoom in, you're going to get a consolidation. Probably if you zoom in, you're going to get a consolidation. So all of a sudden, this last, buy before you sell, 50% marker, there's an area of interest. Let me get rid of this, right? If we put this as, let's just say some random color like orange again, right? You're going to have the area of interest probably in the center line there. You're going to have the area of interest, obviously, no volume there. You're going to have the area of interest, again, central there, right? So although I marked these couple up using the volume tool, you don't need that volume tool to tell you where these things are, right? we're going to go from there to there. And you can see straight away, high volume, high volume spike look, right? They look high volume, high volume at the bottom. You can tell that without one of these, okay? So when I start looking at the charts, what I'm looking for almost immediately is where these things kind of overlap, where they come together, where technically the value area is consolidating. So when I use the session volume there, where these, I have to come down smaller time frame, where these things are actually showing value overlapping each other, left to right, or increasing significantly. But you already know based on the trend, right? The fact that these things have come together, you can average these out, right? Now, one of the things of that video I mentioned at the start of this video, right, the portion, is I've asked Peter Hammer to work with me on creating what I've called Mayfair 2 at the moment. And the general idea is this will end up having the volume profile kind of inside it as well. And the general idea is all to do with momentum, right? So pretty similar to the video that Paul showed. The general idea is once you start looking at the numbers of, inflows, the numbers that are changing hands, you start to see where it becomes aggressive, you start to see where it becomes slow. And just as I said about coming into the station, we've had technically here, down and up. All of this move is one swing up, right? Look at the effort that we've taken to get up practically, from nowhere in the grand scheme of things, right? So, and this is obviously only a 15-minute time frame, based on, this particular point I'm showing you now. So when we look at the swing, what we're actually seeing is a pullback rather than a trend. That pullback then can be measured, probably looking at this, we're going to have the 786 to the 86 type of pullback there, right? So if I put that on, that's roughly the level there, roughly the level there, and we're coming up now. Look, there's the 786 coming up to the 86, and the 86 sits dead on the halfway line of that box that I've got already drafted up, right? So this is how, in my mind, I'm putting these things together. I'm looking at these things. Didn't need, obviously, the indicators on and so on, right? Now, just to finish with, if I look at the Mayfair one, this is the first indicator, right? All I've done in this one is take everything I've just put, all the way through this, and put some of the information almost like easy to access, right? Without having to need to think about it, right? And this is the big reason that I haven't kind of given this indicator out, right? Because you need to see these things for yourself to make your job easier in the long run, right? Don't think that you're missing out by not having this indicator, right? The point being is, I don't use this indicator often. This is just more for showing on Discord the fact that, these things are there and they're obvious rather than me having to type, oh, look, here's a swing, here's a break, here's a change of character, here's a swing, right? Now, the general idea is as we see, volume, right? We swept, obviously, volume yesterday. Look, they would have been the line, right? We swept yesterday with the news and rejected straight through it. We then come up and create that consolidation sideways, right? Which means the volume was all this volume down here, right? There's the real, I'm probably further over to the left looking at this, right? There's the real interest. We've had a taper off in volume as we started to rise, and then we consolidate, right? So what we're actually doing right now is we're only sweeping the high into a larger area of interest on the daily time frame, right? And we've already run out of steam. So where's the downside target? Well, the first target will be there, right? There's your master pattern be informed. This is what the little green dotted line or the orange dotted lines will represent, and there's grey dotted lines as well, just like the master pattern indicated. That's obviously created on the back of the consolidation, right? Which means what we can do is we can measure. I'm just going to do a 50% marker. Let's just assume that we come up to my 50% marker there. We can measure back down so that the 50% lines up with the master pattern. And look at where we come back to. Right? This there, look, is the first area of interest, the first area of liquidity. Which means if I was to guess right now what I'd like to see, I'd like to see a move up, a move down, right? You probably have obviously little moves in between. Move down, back to retest, followed by a dart down and through. Right? That's the type of move that I would guess if I was to guess right now. Right? Now, the reason that I say, it's a guess, and the reason that I keep joking, lucky guessing and this, that, and the other is, I'm talking about, 3-4 moves in advance. I'm not trying to predict this. I'm not saying, oh, I'm going to be, categorically I'm right. I'm saying this is what I'd like to anticipate. If we start to see signs of this playing itself out, then this is where, for me, the trade would be entered. Right? I wouldn't be looking at this going, oh, I want to try to catch the top, and I want to sell this. I want to see that rejection from there, right? I might even consider this down and this back, and I might sell through there. And the reason I'd sell through there is I know categorically I've got a nice little move just there to there. But knowing that we've broken down, I'll be able to do a fib extension based on this to give me a target down. And if that lines up with anything down here, then I know that's pretty decent in terms of a risk reward type trade, but with a high probability, right? So, this is how I use these things without having to, to use these things. The point being is, I'd rather you guys go out and understand this rather than using just the indicator or indicators. What you can do, and the best way to kind of practice this, is to start with, a naked chart, right? And just given that we've just covered, euro, for example, and this is definitely, guys, this is going to be the finish. I don't want to keep this one too long. I know this has been me blabbering, but I think this is really useful for all of you. If I come to Bitcoin, right, and I look at this as a chart, this is again 50 minutes, doesn't matter the time frame, right? This is just to kind of give you the example. What you can see almost, very quick is thin volume at the top, right? Consolidation. Then you come in, that consolidation overlaps this consolidation, right? So from there to there, you deem that as pretty high, right? There's obviously a wild swing there, but because you can see how much effort went in there, that would be deemed pretty high. It's quite thin there, gap there, right? This is deemed quite high, right? Then what you do is you look across this and say, well, if I was to guess right now in terms of all of this, this would be the biggest area, right? Then obviously we come down and we consolidate at the bottom. Then ultimately we come back and we consolidate back into this range, right? So again, this area is quite interesting, there. Probably the lower half of this box, right? But then we come up and we spend a bit more time in the top end, right? So that area for me is definitely an area of interest, right? In this particular swing. Now, if you were to look at that in terms of a profile, I mentioned this yesterday on the video, right? You're going to see something that either looks profile-wise like a small B top and a large B bottom, right? Which then gives you the idea in terms of how you'd play this move next, right? Because if we come up further, we've actually got a large level of resistance at this particular point. Right? If we break down lower, we've actually got colossal resistance, right? But at the moment, technically, it's not acting as support or resistance, which means you're either going to see this or you're going to see this. Right? And this brings me back to why I can look at this and guess what the move is likely to be. So when I talked about a triple top, 18 months back, the reason for it is if we go up too fast, we kind of get stuck, because in theory, we've created gaps that need filling. Right? So you're unlikely to go from 125, 135k to come all the way back to 35k to fill a gap to go back up to 200, right? That becomes less plausible, less likely, and therefore going back up to grab liquidity at the triple top 69k, a little bit of momentum, a little bit of inducing new traders into longs, going 69k plus 102k plus hopium 102k kind of gives you the idea as to why we sat at, I think, 73,000. That's under 4k or roughly 4k in terms of the overall move away from that 69k top, right? And this is not guesswork. This is just kind of going, well, there's the obvious, there's the logic, right? Now if I was to put this on swing high down to swing low and obviously back all the way up, right? Obviously the areas of interest there, look, right, is the split, on the B, look, and obviously this mass volume here, right? So the areas of interest for me is the center, right, the lack of volume there, the center of this B there, and ultimately this one here, one of these two, right? So probably topish and bottomish, right, of a range. So again, if you want to get accurate, you want to get into this, go down a smaller time frame, look at these and draw boxes, and then you can draw your center. You can use your measuring tool or this particular one, right? But obviously, for the example, I'm showing you this kind of rough, right? This is kind of a rough estimate in terms of what you'd expect to see and kind of why, right? And the reason for that, obviously, is knowing why we would see what we see will then determine where the price goes or wants to go next, right? Now, if you tap in, obviously, to liquidity, where's the logic? Where's the rationale? There's a lack of interest up there. There's also technically a lack of interest down here, but I've only based this on the current swing, the previous swing, right? So obviously when you start to put these pieces together, now you take another step back and you could look at the swing prior to this, right? And what you'll find is, again, similar thing, right? The volume, the interest, these areas marry this gap, look, fill in the gap, right? So you start to put this together for yourself. And I hope, obviously, although I've blabbered on this one, I kind of hope this makes a lot more sense, that I'm kind of using volume without using volume. So when I show you these things, it's based on, one, experience, but two, you can kind of piece these things together for yourself, right? When you look at, Elliott Wave and Wyckoff, I haven't mentioned these in this video at all, but where they come into play and how they fit to all of this is that if you know that you are expecting a move, let's put something like this on. If you were expecting a move, something like this, right? What you're going to be seeing is, I'll use a highlighted instead, is you're going to get gaps here and you're going to get consolidations there. You're going to get, a little bit of sideways action here, but you're going to get there a consolidation. You're very likely to get quite a big gap there, followed by a consolidation, right? Not much there, consolidation, right? Smaller gap there, into the pocket, right? For a rejection to, one, come down first of all, right? Which basically takes all of this, comes back and says, let's test the price, and then drops down into the zone, basically collecting all of this, right? And that's really where these things fit together, how they fit together, right? So anyway, I'm going to finish like that. Thanks for watching this, guys. Any questions, right? Feel free to ask, obviously, in the music channels. I'll put the links. Feel free to ask in technical questions. And, rather than DMing me, right, if you put it out kind of publicly, everybody gets to see the value, everybody gets to see the answers kind of all at the same time. And that's kind of the point of having the community. All right. So I'll see you on the next one. Cheers, guys.